All right. Good evening to us all. It's good to have us all around again, and we're going to be sharpening ourselves once more in our business, the digital industry business. Like I always told us, it's not only cryptocurrency that we trade as digital traders. We have stocks, we have bonds, we have um, we have energy, we have futures, we have forex, amongst many others. I believe we can all hear me, right? If you can hear me, please give a thumbs up. Okay, thank you, thank you. All right, so as digital traders that we are, it's important that we meet from time to time because, as we all know, the world is evolving, and so must we evolve too. If not, the strategy you used in killing fish many years ago, I tell you, it might not work anymore. So for you to continue to keep fish, you need to keep up evolving. As the world is evolving, we all also need to keep evolving. I must be frank, I'm not too pleased with the people who are not so familiar with Telegram. And since I shared the group last night, they didn't get to familiarize themselves with Telegram so that they could know how to navigate. But they had to start uh, disturbing me when it was already 5 p.m., when it was time for meeting. I had to stay back to make sure that I put them through in the Telegram group for them to get the link. I'm not so happy with that. I believe we should have familiarized ourselves with Telegram before now, but it's fine. It's all right. Let's move on. So, I started by recording this meeting. Let me ensure I'm recording the meeting again. Okay, the meeting is being recorded. Fine. Mr. Shaye, please, for those who might, I don't know, I'm not even sure they'll be able to chat in the WhatsApp group now. So it means they won't be able to join us eventually because I already locked the WhatsApp group, but it's fine. Subsequently, we'll attend to that. All right, so let's get going. So last time, I forgot to record our meeting. So some people, according to the poll, we had about 7 people wanting us to repeat last last session's topic, and we had just only one person who is indifferent. So we're going to start with that right away. Let me share my screen now so that we can see my screen. Okay, can we see my screen now? I need a thumbs up. If you can see my screen, just give me a thumbs up. All right, thank you. Thank you so much. Thank you. All right, so let's move on. Without wasting time today, we'll dive straight into it. I think everybody here was around last time, if I'm not mistaken. I think last time Mr. Eugene was around. Mr. Frank, I don't know if you were around. Mr. Michael was around. Mr. Shaya was around. Uh, Mr. Olumide, I'm not so sure you were around. And then who else? Okay, I think Miss Moduka was around. Okay, yeah, I think it was just only Mr. Olumide who was not around. So I'll just quickly do a recap and of the session we had 2 weeks ago before I go into the session we had last week. So 2 weeks ago, we started by looking at the flyer we have right here. And what is this flyer all about? This flyer is all about the next bull cycle that is to come. Okay, the next bull cycle that is to come. Like I explained to the people who have always been with me, that majority of us, we don't know how the bull cycle really runs. And that's one of the reasons why we take wrong steps and wrong approaches. And it is one of the reasons why many traders, most especially average traders and newbies in the industry, that is why they lose their hard-earned money. Okay, all they think is that bull season is that last parabolic phase of the bullish season where where BTC keeps going up and up and up, and it looks as though it won't come down. But that's not true. It is not so. As a matter of fact, that is the last phase of the bull cycle. I was still in Royal Q Africa group maybe a month ago now, and some people were talking, and I stepped into the conversation, and what they were saying is the bull cycle. Okay, they were saying some things, and then I waded in and I told them bull cycle is coming and it's going to start next year. And when I said that, people started asking questions like, "What do you mean? Do you mean the bull cycle that has happened last year, or another bull cycle?" And I told them another one, and they were surprised, they were astonished, they were confused. And I had to break it down for them that bull season is not just that last phase when the market starts going parabolic. Bull season is actually in phases. There's the first phase, there's the second phase, and there is the third phase. Okay, and in order for us to be properly equipped, so that the war doesn't catch up with us before we start preparing, that is the reason why we have this flyer we can see on my screen. Okay, there's a popular quote that says, sorry, just 1 minute, guys. Mr. Shaye, can you hear me, sir?
Yes, I can.
Okay,
Yes.
please, can you help me attend to Mr. Moses in the Telegram group? I think he's having difficulty joining. That's why I think I can't see him now.
Let me check him
Please.
out.
Yes, thank you, sir. All right, so like I was explaining, so there's a popular quote that says, you don't prepare for war during the time of war. You actually prepare for war when there is peace. And I find that statement to be absolutely true. It is when everything is fine that you prepare for war. That is the time you stop your warehouses, your arsenal. That's the time you sharpen your skill. That is the time available for soldiers to train, to be ready. That is the time to drill themselves. You don't start drilling when war is already at your door. Okay, and that is why we are incentivizing people. That's why we are bringing to the awareness of people who are not so familiar of how the crypto space works. That is why we are doing so now. So, having said all of those, let me remind us once more, the next bull cycle starts next year. I know this might sound alien to some of us, especially those that are new. And also, when you go out from this meeting place and you go and tell some other people that you heard somebody say next bull cycle is starting next year, they might look at you one way and be like, "What do you mean? But bull cycle just ended last year." That is because they do not have a proper knowledge of the business they are into. That is because they've been told the wrong thing. That is because all they know for a bull cycle is the peak of bull cycle when the market is ready to crash at the euphoria stage. Okay, but for us in this platform, I want us to be properly schooled so that we know the times we are in and so that we act accordingly. Okay, I'm so glad for Mr. Eugene who shared his testimony. The last meeting, he told us that what I explained exactly was what happened to him. The person who onboarded him told him he should come, that bull season is here, as though it was just starting. I believe the person too has the best interest at heart. However, the person too is not properly schooled. And Mr. Eugene stepping on board, did everything needed to be done. Okay, let me start making money. That was when the market started nosediving. And it's so sad because Mr. Eugene lost his hard-earned money. Okay. However, through the proper orientation now, such would not happen to anyone in this platform anymore, except you act otherwise. Okay? Except you act otherwise. Having said all of those, what is the necessary thing that we need to do? Just as we all know, a farmer who is going to the farm to sow seeds on his acres of land, before going to that farmland, he must prepare. He must first of all cultivate the land. He must get the weeds out. He must get the soil ready. He must get his hoes ready, his cutlass ready. He must get the seedlings ready, amongst many others. He must get water ready before he launches into the field. This is what I want us to do, and this is this is why I am actually prepping us right now. Okay, next year is the beginning of bull cycle, and we need to be prepared. Okay, there's a saying that says, when opportunity jams preparation, success is what is guaranteed. If we are prepared now, and then opportunity, which is the next bull cycle, comes and happen, I can tell you success is guaranteed. Okay, I don't have sweet mouth. All I'm going to be telling us is factual. I don't know how to converse or to lure people. No, I'll be proving everything I'm saying empirically. Okay, empirically. All right, now let's dive in straight to it. This is the plan that we have for the next bull cycle. Okay, the bull cycle is 3 years, starting from 2027, 2028. By early 2029, we plan to have exited the market, because 2029 is the euphoria year. In case you are just hearing all of those terminologies from my mouth, by the time I start breaking it down, you will understand. Okay, we do not plan to be in the year until the market gets to the euphoria stage where market starts to plummet. Okay, we intend to get out before that time. So this is the plan. Okay, we plan on starting with minimum of $1,000 capital. Minimum of $1,000 capital. Like I explained to us the last time, nobody is going to take your capital from you. Okay, your capital is going to be in your custody. It's going to be in your Binance. Okay, and then through the API, you are going to be connecting your Vayoh robot, or if you know it as Royal Key, your Royal Key or your Vayoh robot, you're going to be connecting it to your exchange, either Binance or Huobi or BitGet or whatever platform it is you're using, and then your capital stays with you in your custody. Okay, and then through the parameters that I'm going to be walking us through very soon, starting from some couple of months, just around the corner, some couple of months away, then you will start to trade, and then you will see your $1,000 grow with the laid out plan. You see your $1,000 grow months in, months out, months in, months out. Okay, and the goal for us is to arrive at a very wonderful destination, and that destination is right here. For the next 24 months, we plan to arrive at $1 million. $1 million. Okay, you might be wondering, how is this possible? This $1 million is a lot. I've not even handled $100,000 before in my life. I've not even handled $50,000 before in my life. As a matter of fact, right now, I don't even think I can fathom that figure in my head. It is unrealistic to me. It's fine. I understand. But in the same vein, I also want you to understand that the algorithm does not understand one money is huge or one money is small. What the algorithm understands is that all of these monies, they are figures. Okay, it is nothing to the algorithm. They are just numbers. Okay, and as we all know, algorithm doesn't have emotion. Okay, so this is the goal, to compound this $1,000 to $1 million. Another reason why you might be battling your mind or stressing about this is because perhaps you've not come close to a realistic plan before. Okay, there's a popular saying that says, when you aim to go to the moon, when you are aiming at the moon, am I mixing it up now? When you try to shoot at the moon, somehow I still use that phrase there, but I'm mixing it up in my mind now. And if you don't land in the moon, you would definitely be among the what? Among the stars. Okay. So I am not saying emphatically that we will not what realize this. This you can see on my screen. I am not saying emphatically that we will not realize this, but I am saying, should be in case we do not even realize this, you will be among the stars. Amongst the stars of what? 500, 600K, 700K dollars. And I still think for an average man or woman, that's just very, very reasonable. There is no job you want to do in the world right now, except you are an entrepreneur that you get such money within the space of 2 years. So it is still very, very realistic. And who also told you that you cannot even make more than this? Okay? You can make more than, and what if you don't even make more than and you make this? It is still fine. Okay, what if you don't even make this and you make below this? It is still fine. Okay? That's it. That's it. It is still what? Fine. All right. Now, there is a plan that we are going to be following strictly. Okay. And the plan is called the next bull cycle plan. Okay. There are parameters we are going to be punching into our robots that is going to make this happen. Very soon, I'll start sharing those parameters with us once it's time. Now, having said all of this, Mr. Moses amongst us was the one who asked me that, please, can you give me a technical know-how or a visual representation of how this is possible? And that was how we arrived at the meeting we had last time. So let me take us to my calculator. If you look at my calculator right here, can you see my calculator? Somebody just unmute and let me know. Mr. Shaye, can you see my calculator?
Yes, please. Yes, please.
All right, sir. So if you look at my calculator here, I have okay, before the people who I started with in this class, before I even started with them, many of them we never knew each other. We were just in the same group, and from the consistency of the results of the trades that I've been posting, they saw that there was something different, and then they decided to team up with me. Okay, and since then it has been a very wonderful ride, and they can they can testify to what I'm saying, that in a month, give or take, we make, let me not exaggerate, we make minimum of 50% of our capital month in, month out. Okay. Anybody who is familiar with my trade, you know, whenever I post trade, I put 5% there, or 10% or 15%. Those are the percentages that I'm used to. I'm not amongst those who share 1%, 2%. You rarely see me share 3%, not even 2%, 3%, rarely. Okay, but let's say in a week, the market is so down, we weren't able to trade so much, we managed to trade 3 times. Okay, 3 times, taking 5%. Okay, now 3 times by 4 weeks, that is 12. Okay, now 12 by 5, that is 60. Okay, so depending on your capital, you are guaranteed of making 50% and above. And this is for manual trading, pure manual trading. Okay, you get into the market, you analyze, you pick your trade, and then you share. That's how I do it. I share, and people, they punch in the parameters manually. Now, if I can do this manually, what makes us think we will not achieve our goal when we start using Vayoh AI come next year? Now, there are differences between a man and a robot. Man has to sleep. Robot doesn't sleep. Man has to be with family. Robot doesn't need to be with family. Man gets tired. Robot doesn't get tired. Amongst many other examples that I can give us. Okay? Now, if man can make 60% of his capital a month, I think a robot, it will be fair enough to say that a robot that doesn't sleep, that doesn't do all of these things, will be able to double this figure. Okay? Will be able to double this figure. However, I even brought it down to the barest minimum. I do not want to exaggerate, like I told us. I don't have sweet mouth. I do not want to exaggerate. Okay? And what I shared with the team is that let's expect minimum of 35 from the robots month in, month out, not even 50% that I myself am doing as a manual trader. I'm not even expecting that from the robot, not even times 2 from the robot. I am just expecting what? 35%. Okay? And I haven't explained all of this to us. I think we all will agree with me that 35% is realistic, because even I, as a manual trader, I'm doing more than 35%. A robot will definitely do more. Okay? And coupled with the fact that this robot has been around since 2021, this robot has what? It has proven itself. It has withstood the test of time. Okay? This robot, I can boldly say it will do 100% in some months. It will do 90%, 80%, 70%. However, the variance cannot be proven empirically because it is determined by the momentum in the markets month in, month out. But give or take, bad as it may be, like no matter how down the market becomes, it will still do what? 35%. So we have reduced the percentage to the barest minimum. It is not inconsistent. This 35% is not unrealistic. This 35% is not over-exaggerated. It is very, very certain. Okay? Now, having said this, if you look at our flyer once more, you will see that we will be compounding our $1,000 every month for the next 24 months. Now, let me break it down for us how we are going to arrive at our desired results. Now, if you look over here, am I still being heard, Mr. Shea?
Yes, please. You're being heard loud and clear.
All right, sir. If you look over here, you see initial value.
Clear.
This initial value is where we are going to punch in our startup capital. Okay, and then the next one we have is our interest rates. This is where we're going to be punching in our interest rates, and then the interest is what? On a monthly basis. Now, another flip side is you and I know that the robot doesn't make the money for us on a monthly basis. It makes the money for us on a daily basis. But I want us to be on the safest side. That was why I chose monthly basis for this plan. Let me show you. Look at here. Can you see I have daily here? I could have said daily, but I don't want to exaggerate. I don't want to amplify or magnify anything. I just want it. I don't even want to sugarcoat it. I don't want you to join us because it looks too good to be true. No, I just want you to join us based on what facts, based on evidences, based on analysis that you've reasoned with, and then you've seen that this is very, very possible. That's it. I don't want it to be canvassed. Okay. Now I selected monthly, and then below here is where I want. Below here is where we are going to put the duration. For anybody who does not have this calculator, I'll share it with us in the platform after we're done with the call. We all need to have this calculator. It's a very good tool for us as digital traders. Therein, you can always do some simple or sometimes hard mathematics. Okay, all right. And then the duration is for 24 months. Over here, monthly deposits, we won't be depositing anything. Okay, and then that's just the parameters that I'm going to be punching in now. Now you can see I already have $1,000 there. Okay, and then I already have 35% there monthly for the next 24 months. Now, look at the results. This is the result right here. This is the result that we are going to be getting over the space of 24 months. Okay, like I already told you, don't let it blow you out. There are so many people online that makes this money, especially in Forex. And there are even so many people that makes this money in cryptocurrency. Even the guys that get early into meme coin and shit coins, they make more than this. How much more you who have a structure? How much more you who have a plan? How much more you who have a system? How much more you who have a team? I think you are the most blessed. I can categorically say that. Okay, everyone in this group, we are all blessed to have each other. Okay, we are all blessed to have each other. Now, let's go into the details. Now, if you look below here, you will see that on the first month, right here, we started with $1,000, and then by the end of the month, our 35% came out. We had $350. We added the $350 to our 1,000. it became $1,350. And then $1,350 on the second month gave us what? This right here. And then we added it to the $1,350, it became this. And then on the third month, we went again, and then we made this, and then we added it, and so on, and so on, and so on. That's how it is going to compound gradually and realistically until we get to the 24 months, whereby we will start making this sum right here that you can see. Oh, sorry, that's not the last one. This is the last one right here, okay? Where we are going to be making this. And then by then, our total capital is already here, okay? Now, another factual reality I want to bring to our consciousness is this. Many of us right now, if we earn $1,000 on a monthly, and then after factoring in logistics, feeding, and every other expenses, give or take, all of those accumulated to $750, you'll be left with $250. Okay? Now, if you multiply these $250 that you have for savings from your income over the space of 24 months, this is what you're going to be having, $6,000. Now, that same $1,000 that you saved minimum of $200 plus dollars after your expenses, that same $1,000, if you do not even remove anything from it at all, but you start saving that $1,000 for the next 24 months, I tell you, you have $24,000. Now, compare $24,000 to $6,000. The difference, the margin is much. $18,000 is a very huge difference. Okay? Now, what I'm saying in essence is, even if you have $1,000 that come in for you monthly that you don't have to touch, and you just save it for the next 24 months, your money is going to grow exponentially. How much more when the money is working for you? The reason why you arrive at $24,000, if you have $1,000 you're keeping month in, month out for the next 24 months, the reason why you would... Sorry, 1 minute. All right. So the reason why you would have $24,000 is because you didn't touch the money at all. Okay. Now, however, the difference between this $24,000 that you have and the $1 million dollars that we have right here, which is our goal, is because this one right here, for the 24 months, it was working for you. However, this one right here for the 24 months wasn't working for you. This one right here for the 24 months wasn't working for you. It wasn't. You were just saving it, okay? And like we all know, savers are not the ones that rule the world. It is actually people who put money to work that rule the world. There is no billionaire, trillionaire right now on this planet Earth that has become a billionaire or a trillionaire by saving. You all can bear me witness. It is money that you put to work that produces, that yields profit, and then you compound over the space of time that makes you become a billionaire or a millionaire or a trillionaire. Now, that having been said, this $24,000 that you have kept in your bank account for the space of 24 months, what if I told you that your bank is using your money to trade? However, they will not pay you interest. Even if they will pay you interest, they will pay you a token, a minute token that is insignificant, that can't even buy you something worthwhile. Okay? And they see massive profit from this. In case we don't know, let me break it down for us. If you have $24,000, okay, let's say if you have $1,000 by the first month in your banking, in your bank account, right? This $1,000 that you deposited there is no longer there. It's only the figure that you'll be seeing in your bank statement, in your bank account. Only the figure. The money is not there. Now, what has your bank done? Your bank has taken this $1,000 Your bank took this $1,000. They gave it to Mr. A. Mr. A. And they asked Mr. A at the end of 3 months, he should return 1,000, say $1,150. Now, this is the same way when Mr. A returns it with the interest, this is the same way they will do month in, month out, and they will compound the money. But by the end of the 24 months, rather than be fair and give you a worthwhile share of what they made from your money you deposited with them, they will not. They will not. Okay? They will not. So, what I'm saying in essence is, there's a huge difference between your money working for you and your money just being in the bank. Okay? When your money works for you, you earn. You earn beautifully. And you make a substantial profit. But when your money sits in the bank, it doesn't even get anywhere. Okay? It doesn't get anywhere. Having said all of this, I encourage us to key in into this. Okay? It's been proven empirically. And one of the reasons why this will work again, let me share with us, is because we are going to be riding on the back of the horse called what? Bull run. We are going to be riding on the horse, on the back of the horse called what? Bull run. Okay? When there is bull run, there is momentum. When there is bull run, there's liquidity. When there is bull run, the market is active. When there is bull run, market is parabolic. Okay? So we are going to be riding this wave. We are not going to be buying against. We are not going to be doing contrary. Okay? If you are in a boat and you lost your rudder, I tell you, the boat will steer you back and forth. However, if you're in a boat and you have your rudder, but you want to drive against the waves of the sea, you go nowhere, right? You go nowhere. You must always ride along with the wave, because the wave is going to support you, is going to assist you. Little effort is what you're going to exert. But before you know it, you are already ahead. You are already going far. Why? Because you are riding along with the wave of the sea. That is exactly what we are going to be doing for the next 24 months. Okay? Now, having said all of those, let me quickly share with us one more time, empirically, why this strategy is going to work out. Okay? Now, if we look at what we have here, there's a slide that I showed everybody last session. This slide right here is titled Psychology of a Market Cycle. Psychology of a Market Cycle. Okay? If you go on Google, you'll find this there. It's not hidden. It's everywhere online. Now, this was posted by Wall Street, and I know, okay, maybe not all of us. I believe some of us know who Wall Street is and what their profession is. Okay, these are guys who deal with serious money. These are guys who are beyond everything called market. These are guys who are institutional. Whatever you want to use to qualify them. Okay, now they posted this, and I reason with this, and every sophisticated and professional trader also reasons with this, because it is so true. It is so true. Now, let us zoom in and look at what we have there. You see right here. Okay, I'm coming. 1 second. You see right here. Between now to December, this is where we are. That place that I circled red, this is where we are. Okay? Now, for an average investor, an average trader, an average or a newbie that comes into the market, when they come at this time right now and they see the market going down, bleeding, what happens to them is they set into disbelief. Disbelief sets in.
Please, it seems the screen is not showing. Am I the only one?
Can somebody please confirm that?
Yes, it's blood. The screen is blood.
Okay, let me share my screen. Can we see my screen now?
Yes, please. Thank you.
Yeah,
All right,
we've seen
awesome.
it before. Yeah, maybe it's Mr. Sher's network.
Okay, Mr. Shere, you might need to log out and then log in again.
It's okay now. Thank you.
Are you good now?
Yes, I'm good. Thank you. Go ahead.
right.
Thank you.
Okay. So, like I was saying, when newbies step in and then they see the market over here plunging, keep going down, they set into what? Disbelief. And then they say things to themselves, things like this. They say the rally is what? This rally will fail like the others. Okay? It means what? They don't believe in the rally. They don't believe in the what? Upward movement. And then later on, when the market moves a little bit up from here and then comes towards here, you see that they begin to have a change of mind. And then what? Hope sets in for them. They start saying things like what? A recovery, what is possible? I think a recovery is possible. I think the market is going to recover. Okay? But however, between here and here, a lot has happened. Although it looks small in this digital representation, in this image, it's months. Okay? A lot has happened. Okay? And they've lost something, but they don't know yet. However, we are going to get to see it soon. Then the market moves. Now, although they had hope, they didn't take action. Okay? Then the market moves again from here and then moved all the way to this region right here. And then optimism sets in for them. They start having thoughts like, this rally is real. I think it's real. I think this is going to bet something great, right? However, the optimism is there, but still, the optimism lacked what? Action. And then the market moved once more from optimism. From here, it moved towards here. And then belief sets in for them. They start saying things like, I think it's time to what? Get fully invested. Now, look at where market came from all the way here before they had belief in the market. Okay? Now, belief sets in for them. They said it's time to get what? Fully invested. Okay, let's see what happens next. Then market moves from here where they stepped in, where they had belief and fully invested. Then market got here and then they became thrilled. Okay, and started saying things to themselves like, I'll buy more on margin. Okay, I'll buy more on margin. I'm going to tell everybody. I'm going to tell everyone to buy. Now, after that tree they had, then the market pushed up a bit. And then they got into a state of what? Euphoria. Then they started saying things to themselves like, I'm a genius. We are all going to be rich. Now, this is their thought, okay? This is their thought. However, their thought is not backed up with what? With facts. Their thoughts are not factual. They are not proven empirically, okay? Now, before they know what's going on, before they could say Jack, the market had gotten to its peak. And then the market has started going down. Now, permit me to tell you that from this state of disbelief right here to this state of euphoria is a period of 3 years. 3 good years. Now, if we are going to divide it, this should be 1, this should be 2, and then this should be 3. Now, this is the first phase where I've been shouting, we are going to start our plan. This is the second phase where media will start stepping in, and then novices will start hearing about the bull run, and then they will start coming on board. And then this is the last phase where I said we will not be part of them. We would have stepped out. Okay? Now, we are going to see much clearly very soon. Now, the markets, they stepped in at this region. And before they could say Jack, the market has got into its peak. Once market gets to its peak, it starts to come down. And then the market starts coming down. Came down a bit and then reversed a bit. Then they start saying things like this. Complacency. We just need to cool off for the next rally. It simply means a little bit of reversal, and then before we see the next rally up. However, the market did not go as they planned. Then the market came down a little bit more. And then what sets in for them? Anxiety, what sets in? Anxiety sets in, and let's see what they start saying. Once anxiety sets in like that, they start saying things like, why am I getting margin calls? The dip is taking longer than expected. I thought this market was going to reverse soon. What's happening? Why is it not reversing? While they're still pondering on that, the market from there steps down a little more, and then they get into a state of what? Denial. They get into a state of denial. Permit me, let me check something 1 minute. Let me see if our recording is still on before we move too far. Okay, fantastic. Our recording is still on. Okay, now they get into a state of what? Denial. And they start saying things like, my investments are with great companies. They will come back. They are giving themselves what? False hope. In the state of denial, they are giving themselves false hope. And then the market surprises them again, moves from where it was, comes down a little bit more to this region, and then panic sets in for them. Okay? Panic sets in for them. They start saying things like, shit, everyone is selling. I need to get out. Okay? Now, their hope has been dashed. They came in right here. They came in right here, but now they are going out right here. This is a lot. These are several months. The gap between this and this, that arrow you can see right there, is what? Several months. And I can tell you, the capital they came in must have gone down at least by 50%. At least by 50%. Okay? Now, when they panic and they sell, then the market gets to what? A phase of capitulation. And they say they say things like, I'm getting 100% out of the market. I can't afford to lose more. I'd rather take my remaining 50% than lose the 100%. Now, from that phase, the market goes on, from the capitulation phase, the market goes on to the bottom and starts what? Going sideways for some moments. Now, when the market is going sideways for some moments, they get even more what? Angry. They get even more what? Angry. And at this phase, they start saying, who shorted the market? Why did the government allow this to happen? As though the government has been the one regulating cryptocurrency or any digital market. Yes, the government can have a law in place. The government can have ethics in place. The government can have bills in place. However, the governments are not directly responsible for managing cryptocurrencies or any digital assets. Okay. Now, their anger is a misplaced anger. Okay. Now, let's move on. From that state of anger, then the markets after every consolidation, market either goes up or down. Now, after the market has consolidated a little bit here, the market decided to go down even more. Now, when the market got down even more, then they became They became depressed, saying things like, my retirement money is lost. My retirement money is lost. How can we pay for all this new stuff? I am an idiot. You can see they start blaming themselves. They became depressed. Their hard-earned money is gone. It's so painful. I share with their sentiment. It's so painful. It's disheartening. Okay, money you've worked all your life for over the space of decades, right? Losing it just in a flash, it can be very depressing. And I share that sentiment with them. Okay. However, the market doesn't share the same sentiment. The market doesn't share the same sentiment. Why? Because the market doesn't have emotion. The market is based on facts. The market is based on analysis. The market is based on empirical formulas. Okay. Now, from this state right here, you can see this is the lowest state. This is the lowest state of the market. And it is the state where they became depressed. However, one thing they don't know is that after this lower state, the market will start to go back up again. What they do not know is that this was the same state they saw, that they said something like this earlier. This is a soccer rally. it will feel like other rallies. Let me zoom in so that we can see what they said before this cycle started. Now, by the way, everything you can see right here is a complete cycle. This is a complete 4 years. 3 years up, 1 year down. 1 year down, sorry. 3 years up, 1 year down. Okay? Now, if you look at the beginning of this cycle, you will see that over here, they said something like the rally is going to feel like others. You see the same right here that they are saying the same thing. This is a soccer rally. It is going to feel like others. Now, from everything you can see so far, something should stand out for you, which I think it's glaring. And that is the fact that they don't have an idea of what they are doing. They don't have an idea of what the market is. They don't have an idea of the cycle of the market. They don't have an idea of the entry points and the exit points. They are just like what a blind man or woman who is groping in the dark. Now, if not that they don't have idea, they should already know that at this lowest level, that is what the accumulation phase. And that is when they should have stepped in. But because they rather allow fear to rule their faculty, they will not come in at the right time. And then this same thing that happened here is going to happen to them again, because the market has fully bottomed right here. The market has fully bottomed right here. And then a new cycle has started. This cycle is the same thing you can see here. Okay? It has started. And the same way they lost out here, okay, they will still lose out here again. Why am I showing all of this? I do not want anyone in this platform, I don't want our situation to be like this. It might have been like this before, but it will not happen again. Because in this platform, proper analysis, proper knowledge will be shared abroad towards us all. Except you don't join the meeting, except you don't watch the recordings. Even if you can't join the meeting, you couldn't join the meeting. That is when you will run your portfolio on emotions, okay? But if not, I tell you, you will take what? Informed decision. Informed decision. Now, this is the psychology of the market cycle for an average trader and a newbie. This same psychology of what the market cycle is what the sophisticated and what the knowledgeable trader uses, and what they amass wealth. But they don't use it the same way that an average investor uses it. What do I mean? It's just like for all of us here right now that we didn't study what's it called? Is it geology or okay? Let me just in simple terms that doesn't know much about reading of map, okay? And you are handed a hard copy map from your present place. They want you to take in the thick forest. They want you to just like Gooda's ultimate search. I don't know if you all know Gooda's ultimate search. You are handed a hard copy map, and you are expected to search out a treasure. Now, all you have is a map. If you have not had prior knowledge, I tell you, even if eventually you get your way, you must have suffered a lot. Why? Because although you have map, you do not know how to read the map. Okay? Although you have map, you do not know how to read the map. And that is what is going to separates everyone in this platform from every other average investor out there. Now, having said that, let's move on to the next slide. The next slide we have right here is how I want us as a team to reason. Now, you can see right here, it is still the psychology of the market. But right here, it's a little bit, the phrase is changing a little bit because it's called the cycle of market emotions. Now, if you look below here, it says successful traders recognize this as the point of maximum financial risk. Now, let me expand this for us. I believe we can all see it better now. It says successful traders recognize this area as the point of maximum financial risk. When something is maximum, you don't want to be there. And it is risky, you don't want to be there. You and I know. Okay? Now, optimism right here was where the average investor that I showed us previously entered from. Now, from here to here is just a short time. We will not be like that. Okay? And once the market is even here, we already know that this is a place of maximum financial risk. And we would before that time we would opt out. This is the mind that I want us to have in this team. Okay. And the flip side is that we must also know the maximum we must also know what the maximum financial opportunity. The maximum financial opportunity, which is right here. This is it. This is it right here. What's happening? Okay, this is it right here. Where an average trader becomes scared and skeptical, that is when we are going to have boldness. And when they are beginning to have boldness is where we are going to be fearful. Okay, that's why what's it called now? Warren Buffett will always say, when everybody is fearful, be greedy. And when everybody is greedy, be fearful. That statement is so true. Okay? This is where you are meant to come in from, so that you can have a long ride. You don't come in from here and then expect to have a long ride. It's a short one. But when you come in from here, right here, you have a very long ride. Okay? Now, we must be able to spot the difference. Okay? It simply means bull market is maximum point of financial risk, and you must not be there. And it simply means bear market is the maximum financial opportunity, the cheapest, the most discounted price you can get in the digital currency world. Not even in crypto alone. Okay, even in stock, even in forex, whatever digital trading, that principle works for them all. Okay, now what I want us to know is we must be able to identify opportunity in bear market, and we must be able to identify maximum financial risk in bull market. All right, now let's move on to the next slide. Now this is an example of let's say Mr. A. Okay, this graph is just the same as the previous two that I've shown us, but this is a little bit different because the illustrations are different. Now, if you look at Mr. A right here, Mr. A saw the market at this base, at this stealth phase. He said to himself, I will buy lower. Then the market moves up a bit, a bit of bear trap, and then moves up, and then Mr. A still says to himself, it's a bull trap, not a bear trap. Mr. A says to himself, no, it should be a bear trap, actually, not a bull trap. Mr. A says to himself, it's a bull trap, it's a bear trap. And then the market moves on more, and then Mr. A says to himself again, it's still below the all-time high. Now, my question is, why do you want to buy at the all-time high? If not that you lack knowledge. Now, the market moves up a little bit more. Mr. A right here said, I'm so stupid. I will buy on the next pullback. Eventually, the market did not pull back. The market went parabolic. Like I told us, bullish season is always parabolic, okay? We saw the last one that ended January this year. And then market went up more, no pullback. Now, parabola that you can see here simply means parabolic, okay? It's not written in English. That's why it's written as parabola. Now, the market went up without a pullback, and then Mr. A said to himself, what the fuck? It's going higher. And then at this region right here, Mr. A panics, and then he bought in. Mr. A panics, and then he bought in. Now, look at where Mr. A is coming in from. Right here. Look at the all-time high. Okay? Can you see he's a very risky investor, a very risky trader? There's a popular saying that that goes like this. Driving a car is not risky. Not knowing how to drive a car is the real risk. I think I subscribe to that. If you know how to drive a car, you will not have any reason to worry. You can even drive that car subconsciously while talking, while gisting, whatever it is you are doing behind the steering. But when you don't know how to drive a car, you'll be sweating behind the steering. I think that statement is very true. Okay? Now, look at number 6 right here. Mr. A said to himself, thank God, I bought it. Pump it now. I'm a bull now. When the bull market has already gotten to its pinnacle, Mr. A is beginning to tell them, pump it, pump it. Unfortunately, I'm sorry, there is no pumping machine that can even pump this. Okay? There is no pumping machine that can pump this. And then after the market has gotten to its all-time high, of course, when the market when it gets to its peak, it starts coming down. Now, what happened here once more happened between the space of 3 years. Okay, 3 years. Now, let's look at the remaining 1 year. Now, the remaining 1 year is for correction, the bear market. The bear market steps in and then came down here at number 7 here. Mr. A said it's just a small correction, but of which it's not a small correction. Bear market has set in already. And then a little bit of reversal. Mr. A said it's consolidation before we pump. I'm sorry, it's just a little correction. It's not before we pump, it's before we go down more. Okay? And then afterwards, we see here at number 9, Mr. A panic sets in. The same way he bought panicking, it's the same way he's selling panicking. You can see that. You see the place of knowledge there. There is a void there. Okay? There's a void there. He lacks knowledge. Okay? He starts saying, what the fuck? Crypto is scam. Then he sells as he's panicking. Now, then let's look at what happens next. Number 10. Then he says to himself, I thank God I sold. I'm a bear now. What kind of a man is this? You didn't even make profits. You sold in loss and you are even thanking God? No, this, I don't want to be our testimony in this platform. Okay? I don't want it to be our testimony. Okay? And then right here, the market tanks fully. And then the same thing he started with. He started again saying, I will buy lower. And I think that was what he started with. I will buy lower. Can you see number 1 here? I will buy lower. That is the same thing he's saying. After the market has finished an entire cycle. Okay? We see the place of lack of knowledge there. It was evident. Now let's move on to the next slide we have. This is another example showing Mr. Isaac. Am I still being heard?
Loud and clear.
Loud and clear.
All right, thank you. This is another example of Mr. Isaac Newton. Okay, I don't know if this was true, but I think from what I can see here, it's looking true because we all know who Isaac Newton was, and this is according to the C stock market in December 1718. Okay, it might be true. I might check it out. Now let's look at his own example. His own example is not too different from the one we've seen. Let's see how his own plays out. So, Mr. Isaac Newton, the market was down, he didn't buy. See? He didn't buy. Now, when the market got here, Mr. Isaac Newton bought a bit. It's very important for us to mark a bit. Now, he didn't buy alone, he and some of his friends. Then the price went up a bit. Mr. Isaac Newton was exited, sold his complete bag, okay? And then the market went up a bit. Then Mr. Isaac Newton's friend became rich. You know why? Because although they didn't buy early, when they both bought, some people waited a little bit more and rode along with the wave of the market, and then they were able to secure at least from here to here, where they sold their bag, is the space of 2 years. Okay. Now the remaining 1 year, let's see what happens. Then Mr. Isaac's friend got out from here, and then the price kept going up. By the way, this is the right place to come out. We shall see that very soon. Then the market kept going up, and then from FOMO, Mr. Isaac Newton said to himself, I think this price is still going to go very parabolic. I better enter again. Now, let's see what he did. He re-entered the market with a lot. Can you see, because he doesn't have proper knowledge of the market space, he's doing the wrong thing. When he was supposed to enter with a lot, he entered with a bit. When he was supposed to enter with a bit, he entered with a lots. And that is the key point that I want us to point out. Let's not make mistake. Let's not do the right thing at the wrong time. This should have been where he bought massively. And then even if he wants to buy here, it should have just been a very tiny little sum. So that perhaps, since he's gambling now, perhaps if it doesn't go according to his plan, he wouldn't have much to lose. Okay? And I can categorically tell us, for anyone who lacks this knowledge of the market cycle, that person is a gambler. I can tell you, he's a gambler. Even if he wins, he won by luck. He didn't win by what's it called? He didn't win by strategy. He didn't win by concrete plan. He won by what? By luck. Now, Mr. Isaac Newton re-entered here. He re-entered here, and then the market got to its peak, and the market started coming down. And when the market got here, Mr. Isaac Newton, he exited what? He exited broke. Because from here, where he re-entered, down to this place is about the space of 2 years. Or 2.5 years, thereabouts. Okay? Now, I don't want any one of us on this platform to fall into this category of Mr. Isaac Newton. All right, now let's move on to the next slide. Let's move on to the next slide. All right, the next slide we have is the flip side of the market's psychology, the psychology of the market cycle. This is the flip side. You know, I told us that the same graph that represents the average and the mediocre and the non-knowledgeable ones and the newbies is the same graph that that is also used to represent the sophisticated and the vast traders and investors. Now let's look at this together. If you look at this right here, you see that there's a vertical line. Look at this. Look at the vertical line. There is another one here. And then there is another one here. This is year 1, this is year 2, and this is year 3 of the bull cycle. And then this is the 1 year of the bear cycle. We see that. Now, the smart money, I mean the people who move smartly, the people who milk the life out of the hell of the market, this is where they're coming from. Where Mr. Isaac Newton, where Mr. A, where they said it's just a rally that will end up failing. It's not a real rally. It's just this, it's just that. They refuse to enter. This is where a sophisticated investor or trader is meant to enter. Because at this level, the price is relatively cheap. The markets which your money couldn't buy so much previously, when the market is at this level, you'll be able to buy so much. And permit me to tell you, this level you can see right here, right now, is what we have in the market right now. We are in that phase right now. Let's look at a quick example. Look at this. Look at this. Okay. Let's go to weekly. Now, look at the all-time high. If you look at my screen, you see that this period here was September 2025. Okay, September 2025. You can see it down here. Look at it, September 2025, which was just September last year. Okay, Solana came to about $248. It had done, I think, $300 before, but at least September last year, it came back to $248. Now, when the market is here, when the market is around here, you are not supposed to buy in. This was where Mr. Isaac Newton came in. This was where Mr. A came in. This is where an average investor or trader, this is where they will come in. When they see it's going up, it's going up. Okay, let us join. So that no. We don't move on what emotions. We move based on what knowledge. Now, don't join them, because from what you can see from a live chart, you can see that after Mr. A came in here, the market only came a little bit further, and then from there it started going down. Now it went down past where Mr. A came in, which is this region. It is still going down. Look at that. It is still going down. Can you see that? Now, if Mr. A now chooses to step out here, can you see he's stepping out in loss? Because right here, he stepped out at about $180 to $200. Now, right here, if he steps out, he'll be stepping at $120. He must have lost 50% of his hard-earned money. Okay? Now, however, what I brought us here to look at is the market was here, $248. The market is here, $73. Let's do a quick mathematics. If you had $20,000 and then you bought at $248, you only have 80 Solana. Now, if you have that same $20,000 and you are buying at $73 now, you have 273 Solanas. Look at the difference. Minus 80 from 273, you have extra what? 193 Solana. 193 Solana is a lot. Now, let's imagine next bull cycle, Solana goes back to, it goes past the previous all-time high, it goes to $500. Let's see what each of them is going to earn. Now, the person who bought at $273, who bought at $240 something that had 273, let's multiply $273, 273 Solanas by $500. Is going to be having 136,000 US dollars. And the person, okay, this is the person who bought low at $73. And the person who bought high at $240 something, who had 80, okay, 80 Solanas by 500. You only have $40,000. Now compare the person who had 273 by 500. Now $136,000. Compare it to $40,000. See the difference. The stark difference is what? $96,000. That's a lot. I tell you, if I lay my hand on this $96,000, it's a lot. I would do a lot with it. And I'm so sure that every one of us in this group, even if you do not have this $96,000, if you are giving $50,000, I can vouch for many of us in this group that you will do a lot with $50,000. Isn't it true, my people? Let me hear our voice. Isn't it true?
Very, very true, sir.
Definitely.
Very true, sir.
Very, very true. Very, very true. Okay. Now, so I said that to say that we need to enter at the right spot. Now, the right spot where we are supposed to enter is this region where the market is now. Okay. Look at this. For the next, we're in August now. For the next 4 or 5 months now, we have August, September, October, November, December. For the next 4 or 5 months, the market is most likely to be oscillating around. It is going to be going sideways, like we saw. Okay, I'm not sure it has anywhere further down it wants to go. Although for meme coin and for shit coins, they will further go down. But for Solana and the first maybe top 50, 100 tokens, they will just be what's consolidating. Because this area of consolidation is the area where smart money step in. Okay, so we will be seeing things like this in the market. We'll be seeing things like this. Okay, no, this one. We'll be seeing things like this. This is called consolidation. Okay, or sideways movement. Okay, it might not be this clean, but it is going to look like this. Okay, now this is the area where smart money is what accumulating. It is called an accumulation phase. This is where they are accumulating. Okay, this is where they are what accumulating. Now, from what I can see from this market right here, let me tell us for free, This is on a what? This time frame is on a weekly. If you look at this right here, you see that a sell order block just formed again. This red block right here, it just formed. It simply means the market is still going to go down more. Okay, and if you look at it closely, on a weekly time frame, this is the discount level. Let me show us the discount level. No, not exits. This is the discount level. It simply means the market is still going to come around here. And this is around $20. I can tell us for free that I've forecasted this many months ago. Let me see if I can still see it. Just 1 minute. Let me see. Coming 1 minute. Okay. Let me quickly search for Solana. Okay. This was when I was just doing market analysis for some of my friends. I said, okay, let me go up a little bit more. I think it started from, okay, I can see it now. The next stop, look at it. Can we all see it right here? I said here, and let me see the dates. Let me see the dates. This is 6th of June, okay, 2026. I was predicting the market, and I said, I think the next stop downward for Solana is $57. Okay, and I said if $57 hold, we will see a reverse upward towards 78 and maybe towards 96. If 57 doesn't hold but breaks, next stop downward would be what? Can we all see this? Next stop downward would be what?
21.
21.
And this was as far back as June.
21.
This was as far back as what? As June. Okay. This was as far back as June. Okay. Now, you see, it is important that we have proper what? Knowledge, technical know-how of how our business runs. And from what I can see here, I can tell you there's still a very bloody downtrend that will come. Okay. After this reversal, as we all can see, Bitcoin is doing 64, 65, 63 right now. It's just what? To trap people. People who think the bear market is over, okay? They think the bear market, that's a bull trap. They think the bear market is over. The market is going up. They'll start stepping in. They still lack, those kind of people also lack knowledge. When by the time they've all stepped in, then the market will stop its correction and then it will come all the way down to the discount level, okay? Now, having said all of those, let's get back to our slide. Now, the smart money gets in at the stealth phase, which is what I just showed us now, where the market is now, and then even further down. You can start doing DCA now if you want to buy and hold, okay? After the smart money steps in, they have accumulated at a very cheap price, just like we could see the difference that I showed us in the calculator of who bought at what, $240 something and who bought at what, $73. Now, after they've stepped in and they bought theirs, then the institution, they step in. Now, but however, you see that institution also, on the second year, the price is not really bad. It's still very far from the peak. And I think this was what the likes of Michael Saylor did 2 years ago when they started approving Bitcoin ETF, Solana ETF, when the institutions, the BlackRock, they started stepping in. It was 2 years ago towards the peak of the market. So you can see that history is what's repeating itself. Now, they still got a fair price. After institution stepped in, then the public started noticing, something is going parabolic. Everybody coming. You make money. Then the public gets in around this region. When the market is close to its peak, to its highest point right here. The distance between here and here, like I showed us in the live chart, is not much. Okay? These people that stepped in right here, the public, they will become the exit liquidity for those who bought here. And I can categorically tell us, with this knowledge we are being shared right now, we will not fall prey of such, okay? We will not fall into such trap. And then After the public sets in, the market gets to its pinnacle, and then it starts coming down. And you know, when it comes down, it is the public that gets burnt the most. Okay, now what I want us to employ, the strategy we are going to employ is, since we are also using the smart money concept, we are also going to trade like what the smart money guys. This is where we are going to enter from. Okay, and we are going to hold it for year 1, year 2, and then on year 3 we are out. When the public is beginning to notice that something is going on, as they are entering, we are stepping out. Okay, we won't even wait for the pinnacle of the market, so that we don't get burnt as well. As a matter of fact, according to my plan, okay, if you look at the plan that I showed us earlier, right here, I said for 24 months, for 24 months, not even for 36, not even for 12 plus 12 is 24. 24 plus 6 is what? 30. Not even for 30 months. That's 2.5 months. For 24 months, that's 2 years. You see, by the time we enter here, by the time institutions are stepping in, we are already We're already selling off. As you can see, there is a first sell-off here. Can you see that? Who do you think can sell off so early like this, if not the smart money guys? The ones who entered at the early phase. Okay? They are the ones who could have this effrontery to sell off when the market hasn't even gotten to its pinnacle. And why could they have done such? Is because they came in with a strategy, they came in with a plan, they came in with a deep knowledge of the market. They had their plans well spelled out. They entered into the enemy zone, they struck all of the enemies, they took the gold, and they left the scene. They left unnoticed. This is how we are going to trade the next bull phase. Okay? This is how we are going to trade the next bull phase. Now, leaving a whole year for anything that wants to happen in the market to happen, I think is the safest anyone can do. Getting in here, let me take this off. Getting in here and leaving here, I think is the safest anyone can do. Okay? And if you get out here, you go and put your profits to proper use. Go and secure real estate. Go and create businesses that will multiply your money. Don't go and start drinking. Don't go and start womanizing. Don't go and start doing all sort of abominable and immoral things. This is a once in a lifetime opportunity. Let your head be cool if you are still young. And if you are old and you are still doing the things that you are not meant to do, I encourage you to cease doing them. Because I tell you, all of these things will blow your money away. I and Mr. Eugene were having a conversation today, and we're both sharing that anyone that sees anything from, let's even come down a little bit from this amount and above, and then you still squander it and could not do anything worthwhile from it, then something is wrong with you. Something is really, really wrong with you. That's really not part of our of our discourse, but I just branched there. So sorry, let me move on. Okay. Now, what I want us to know is, you see, from this phase right here and this phase, that's the space of 2 years. Now let's do a practical analysis. Okay, a practical analysis, because I like practicality in this business. These things are provable. Okay. Now let's go to 1 month. Now look at on a 1 month Solana, right? This is, let's go to January 2022. This is 2021. This is January 2022. Now look at this. I'm going to take off these previous ones that I have so that we can understand. Now, can we see the dates below? This is December 2021 / January 2022. Okay, that was the end of the 2021-2020 bull cycle. Okay, now the market tanked. Let me go to 1 week. 1 second. Oh, okay, 1 week. Now, the market tumbled from this pinnacle. Can you see the pinnacle? The market tumbled from here and started coming all the way down. Now, let's see when the market stopped its downward trend. Okay, I think the market stopped at about here, right here. Look at that. The market stopped here. And then when the market stopped here, consolidation started happening. Look at this is consolidation right here. You see that the market did not go out. It didn't shoot up. Neither did it go down past the box. Okay, until it was full time for the market to start going upward. Then it shot out. But for a while, the market was within this range. Now, let me show us for how many weeks that was. Because each candle you can see here represents 1 week. 1 week. Now, look at it. It started from here. That's December 2022. Okay? To October 2023. Can you beat that? That's close to a year. December to October 2020, December 2022 to October 2023 is a year. So you can see the market was oscillating. It was It was consolidating for a whole year. For a whole year. Now, look at the downtrend right here. Okay? The downtrend lasted for just 1 year. That was November 2021 to November 2022. Okay? And then this was where Mr. A and the average investors failed to step in. But the smart money, they stepped in. The smart money, they stepped in at this place where the market was oscillating and correcting itself, which is what the accumulation phase. Now, after having bought, everybody was still scared. They were still skeptical. Then the ones who the smart money who is going to accumulate, they already accumulated massively. Then the market started going up. Now, let's see. The market started from November 2022 and started it started from November 2022 to oscillate, and then let's check 2 years from that time of oscillation. I'm coming. So November 2022 to December 2022 to November 2023 is 1 year. This is 1 year, yeah. And then from November 2023 to November 2024 is another 1 year. Now look at this. Can somebody tell me, are we still in bull cycle until we were done with our plan, or we were out of bull cycle? Can somebody tell me? This is 2 years right here. Are we still in bull cycle, or we're out of bull cycle? Until we are... Go ahead, sir.
We are still in bull cycle.
God bless you, sir. Now, because if you see, after we came out here, let me show us. After we came out here, the market even still corrected itself and still came to do what? Another all-time high. Look at it. We stepped out here. The market corrected, still came up to do what? Another all-time high. After the all-time high, it still came down again, still came up again. But all of this now, we did not experience it because we were out already. You see the importance of knowing the times and seasons of the market. You see that we came in softly, we exited softly. That is what our plan is all about. Okay, that is what our plan is all about. And I want us to attack the market as a smart money guy, and then we'll be among those who will sell off first. Now, let's go on to the last slide we have for the day. If you look at this slide we have here, everybody, you will see that markets are in circles. Look at Bitcoin cycle pattern. Okay, the first cycle we have here recorded was 2024. Okay, 2024 to 2027 is how many years? 3 years. The market was going up. Okay, when it got to its all-time high, market started nosediving, and it came down to where it started from. Now, it went up 2024 to 2027, that's 3 years. 2017 to 2018, 1 year. It came down for 1 year. Can you see that? Now, 2018 to 2021 is how many years again? 3 years. It went up again, forming another all-time high. After going up in 2021, let's see what happens if the pattern still continues. 2021, it formed a new all-time high right here. And then 2021 to 2022 that I just showed us now in Solana live chart, it came down. Then 2022, back to where it started from, it went up again, doing another all-time high. Now, 2025 it just passed, okay? It was just last year. This is where we came from last year, okay? The all-time high, right? And then now, let me show us where we are according to this calendar. We are somewhere right now around here. This year started with the all-time high, and then its price has crashed all the way down to this region. Very soon, the rest of the month, which is August, September, October, November, December, it will fill up this remaining. It will fill up this remaining. And then by the end, which is December, wealth transfer will begin. By God's grace, we all here in this meeting are going to be partakers of that wealth transfer.
Amen.
Okay?
Oh, amen.
And then from there, the market will pick up again. The market will pick up again, start to do what? To go up for another 30 years. As you can see up here, 364 days down, 1,064 days up. 364 days down, 1,064 days up. It's a reoccurring pattern. If this reoccurring pattern is so glaring like this, then I think you all should be rest assured about our plan, that the plan has an empirical backing. It has what? A proven strategy. It has what? A lot of statistics backing it up. Having said all of this, I would draw the curtain here for today. I believe we've all been able to glean as much as we could. Thank God this session was recorded this time around, and then it will be uploaded so that for us who wants to see it again or want to share with our loved ones, to convince them or to just explain things to them, whatever it is, or you want to use it to bring them on board, you would have it. You would have it. All right. Let's draw the curtain here for today. Does anyone have a question? Does anyone have a question?
Okay, I have one question, sir.
All right, go ahead, sir.
Yes, first of all, thank you for carrying out that poll that made us repeat this particular session.
You're welcome, sir.
Yes, sir. Thank you very much. Then the question is, during bull session, do we have anything like, or rather, the trading for bull, is it both long and short, or only long?
Okay, that's a very wonderful question. To answer that quickly, we won't be trading futures at all during the bull season. We won't be trading futures at all. Okay, there are different mechanisms that works for different cycle. The reason why we are trading futures right now is because you can't buy long now when the macro market is coming down. You would only be shooting yourself in the leg. And the market mechanism available to trade this phase is the futures. That's why we are trading the futures. Okay, let me speak for myself. That's why I'm trading the futures. If it were to be possible that spot market, I could trade spot market and still trade down, but it is spot market and I'll still buy down, I would have been trading the spot market now. But because spot market is not available for buying down, that's why we are trading futures. So next year, we won't be trading futures. Our plan is not going to be happening with futures. As a matter of fact, don't expect one future signal from me for the next 3 years. And don't even expect any manual trading or any signal at all from me. Okay, maybe when I'm free and I just feel like I can do it, but I won't be devoting my time to that. I'll be devoting my time to a very better cause. Okay? Just monitoring things, not even stressing myself. I'm stressing myself a lot these days, but that time I won't be stressing myself. Just sit back, monitor the ride, and make sure things goals are being boxes are being ticked. Boxes are being ticked. That's what I want to do for next year. So for next year, it is strictly spot trading for the next 3 years. The market is going up. Spot trading is there. What's come to worse, if the market goes against you during bullish season, you'll be in floating loss. Okay? You won't even lose anything except to sell in loss. But if you don't sell in loss, you still have the assets and you still have it in your custody. But when the market reverses and goes back to your price, you have your thing, and then you sell it out in profit. So why should we use futures when spot is available for the next 3 years? What if you're using futures and you've been winning, and one day a flash crash happened? A flash crash happens, and then you already bought up, but the flash crash quickly took you down, and you are using futures in the bull market. Don't you know everything you've been compounding is gone? So we are not going to be using futures. Strictly spot trading, where there is no loss, where there is a proper strategy, there is the proper knowledge, there is the proper parameters, there is the proper tool. All of these things are the mix that makes up a successful trader or a successful team. When you want to cook when you want to cook jollof rice, you don't just put rice in the water and just tell the jollof rice, oh yeah, I put rice in the pot and water, jollof rice come out. No, rice and water alone does not make up a perfect jollof rice. It doesn't. It's just 2 tools out of the many tools that you need to derive a very wonderful jollof rice. In the mix of that tools, you have lots of other ingredients. Okay, in the mix you need is much more than rice and water. You still need oil, you need pepper, you need Maggi, you need salt, you need crayfish, you need pomo. If you are the type that eats pomo, you need lots of things. Okay, all of those things combined is the perfect mix needed to generate a desired result. So for that next year, the proper ingredients needed to generate a wonderful jollof rice, which is our goal, we have it already. So no futures, spot trading strictly. Any other question?
Yes, sir. Thank you, sir, for that answer. Like we are preparing $1,000 minimum. Can this $1,000 be used for like 2 trades or just for 1 trade at a time?
Don't worry, Mr. Michael, about 1 or 2 trade. Either you start with 2, either you start with 1. The goal is the goal, and you arrive there. Okay. If you have more than $1,000, why not? You can start with two trades simultaneously. But if you don't have, don't worry. It's not all about trade. It's all about the goal. Okay. It's all about the goal. So start with 1. Start with 1. Just start with 1. If it is $1,000 you have, but if you have more, of course, you can start with multiple. If you even have 5,000, if you have 10,000, you can start with that. It means you'll be having up to 5 trades simultaneously, which will even get you to your goal even much more faster. If you look at my screen right here, if you start with $5,000, let's do 12 months for the duration. Okay, I think at 12 months, you don't still have your desired results. Let's see 13 months, 14, 15, 16, 17, 18. Look at 18 months, you're out already. 18 months, you're out already. And by the way, there's no way you will be using $5,000 and you get 35%. If you're using $5,000, I would increase this percentage to 50 straight up. 50%, you see that conveniently. Okay, so if you're going for 18 months, you have $7 million within the space of 18 months. If you reduce it to 12 or maybe 13, you already have your results. Okay, 14 months, you already have your results. Okay, so that's it.
Thank you so much, sir.
You're welcome, sir. Any other question? Okay. All right. Fantastic. Let's call it a day. We've gone past our time already, but I believe it's been wonderful, and we've we've all had a great impartation. All right. Good night, everybody. See us in the next meeting. Do have a good night rest. Thank you, Madam Mujupe. Thank you. Thank you. All right. Bye, everybody.
All right, thank you,
Yo,
coach.
hi. Thank you so
Thank you very much,
much.
huh? Thank you.